What is going on YouTube and X? It is I, Brendan from Market Makers. Guys, we have a special video for you today. I'm going to show you an esoteric crash pattern nobody knows about. We've been absolutely killing it on this channel the last 2 months in trades and in TA as well. We've been crushing it in the Discord. Last week, I gave you that 43.82 short on the S&P. And what did it give you? A 4-spot 19% drop, 180 bars. October 5th, I made a video telling you October 18th could be a key pivot, beginning of a crash in the marketplace. And I was letting you guys know that this is something that can play out. Lee, show them the thumbnail. Lee, when I snap, show them the thumbnail. There you go. All right. So that's the video, guys. Watch that. But also in that video, I showed you the bottoming pattern for the S&P based on what? Another esoteric pattern here, a fractal pattern that's forming. Look at your all-time high, 4,600 to your market low, the 3,500 range, 201 bars. Look at the move up from your market low to your 4,600 range, 203 bars. This is a law of three pattern, natural law trading. Law of three pattern tells you this next move down of 200 bars again, 202 bars, gives us a bottom Monday, May 6, 2024. Now, in between now and then, we have to lose our key support. We have to trade below 4,000. We have to take out the market low in the S&P because, as you guys know watching this channel, the market has never set a low prior to a recession. Not once in history. Guys, if you understand the market cycles, this can help you with your trading. I'm seeing people on YouTube apologize for being too bullish. This is a bear market rally. It's always been a bear market rally until you take out the high. You take out the all-time high, 48.20, then you're in a bull market. This is a bear market rally. In the 1970s, we had two rallies in the 1970s bubble that went up 60+% on a rally. If you took out the 7 stocks that caused this rally off the bottom, the overall S&P is either flat or up 4%. That's prior to the sell-off. So what we have now is earnings this week. We got a lot of big catalysts. So in this video, we're going to cover the S&P. We're going to cover Bitcoin. I'm going to show you the diamond pattern it's trading and how to trade it, okay? We're going to cover gold and that parabolic arc that it made. And guys, consider checking out our Discord. We've been killing it with the trades. As you guys know, I've given you the 43.36 trade on the S&P when it dropped back down into the 4,200s. We took additional trades in the room. Mark in our room, one of our senior traders, longed the S&P at 4,200. He longed gold down at the bottom at 1804, and I gave you the gold short from 2055 for a 250 bar drop. I'm on a 7 or 8 trade win streak. Check out our Discord. It's absolutely free your first month if you want to try out SimpleFX or BingX. That's SimpleFX, guys. With our link, you exclusively get up to a $5,000 first-time deposit bonus. Check them out. You can trade all the assets there, and check out BingX. You don't need a VPN for BingX, and you can trade all the myriad of cryptos. But guys, when you join our room, all our education, all of our 6, 8, 10 indicators, I don't know how many we have customized now from Fractal Trade 15, those are all free. And you're there for a free month to try it out. So check it out. You can message Lee in the Telegram. All that information is in the video description. Take a moment, like and subscribe to the channel. I appreciate it. It helps us out in the algorithm. So this is what I'm looking at, guys. We have key points to get to, but this is where it's going to go. And again, my bottom, we went over this many times. My bottom for the S&P, 2000 to 2400. You look over the past cycles, you look at the 1972 crash. When you look at that crash, the largest break in the market since 1929, that's when the S&P fell 64%. And what's the average bubble move in the marketplace? 50% on the S&P. However, GFC went down 57%. Nasdaq went down 84% back in the dot-com bubble. So there's big moves to be made. And currently, we're going to see if we can rebound. But this is where we're at. I'm showing you this again because you're going to start seeing this probably on other people's YouTube channels, just like you saw my pivot pattern, guys. A lot of pretenders out there, a lot of people that just bought crypto down before the money, and they said, hey, let's do some TA, but they do not trade. I can tell you that from watching the channels and the screenshots and the things all of you guys send me. But let's go ahead and get into the S&P a little bit more. What's this esoteric crash cycle I want to talk about with you? Well, Steve Petz crash window, the Petz crash window. This is a solar cycle having to do with the solar eclipse followed by a lunar eclipse. So Steve Petz, he's a mathematician. He's currently doing fractal analysis of geological features and stuff. He's not a trader per se. He's a mathematician, but he wrote a paper just over 20 years ago, actually in his book, talking about cycles in the market. He went back and looked at the 8 biggest crashes in the market, going all the way back to the 1600s to the tulip bubble. All of them had a solar eclipse followed by a lunar eclipse, which is more powerful when it's a full moon lunar eclipse, followed by a lunar eclipse, and then they cratered. And specifically looking at the tulip bubble, looking at 1929, moving forward, 1987 crash, and as well as the big crash that they had in Japan. That crash, by the way, in Japan took over 30 years. I think they just made that new all-time high earlier this year. So that was a housing bubble and an equity bubble. So does this mean something? Again, what is a cycle, guys? When I show you cycles, when I show you fractal patterns, it's a confluence factor. If you're going to trade, just like you would trade with patterns, market structure, Fibonacci, it's a confluence factor. And Steve published that book prior to 2000. So he didn't look at .com. He didn't look at the GFC. I went back and looked at the GFC and look at my screen. Look what I found. Here's your solar eclipse, Friday, the 1st, August 2008. Here's your lunar eclipse in gray, which I do not believe was a full moon. So I went ahead and put the full moon on here as well. But you can see you had your solar eclipse, your lunar eclipse. Let me move this out some so we can see this a little bit better for you guys. Get the dates under here. August 15th, just roughly 2 weeks after. And then you had your full moon, and then the market fell 49%. Again, I know some people aren't going to understand this, right? Especially other YouTubers that watch my channel. They're going to be like, what the hell is he talking about? They're going to be, a little bit confused.
Kylie Jenner to the foyer. I have a little surprise for you.
Is that a chicken? Wait, what is that?
The Kardashians. Wait, before I explain the cycle, I have a funny Kardashian story to tell you. So last year when I was living in Naples, before the last hurricane, right? Remember I was doing streams from Naples. I went to a bar at Sanibel Island where we have a condo. And I went to a bar, sitting at the bar to get something to eat. And a woman was staring at me across the bar, and she was attractive. So I was like, all right. And she gets up to walk over to me to talk to me. And I'm like, what is going on? And she's like, hey, I know you. I'm like, oh, you know me? And she's like, yeah, you're that guy on YouTube. I was like, oh, yeah. It's like, you watch like economic and, trading channels? And she's like, oh, no, I don't. My boyfriend does, though. So instantly, thumbs down. But she said, I have a question for you. And I thought she's going to ask me about her boyfriend trading Bitcoin or something. I said, what's up? And she said, do you know the Kardashians? I was like, the Kardashians? She's like, yeah, you're on YouTube. Do you know the Kardashians? I was like, oh, yeah. I'm hanging out with Kylie later. We're going to go to Tom Brady's house for a barbecue. And she just looked at me and I was laughing. She's like, oh, you're joking. I was like, yeah, no, I'm not famous. I don't know anybody. I have a small channel. But I just thought that was funny. Then I took a picture with her for her boyfriend or whatever. But that's the only person, by the way, in public has ever recognized me, apparently, other than my own friend group. So let's look at this. So the Petz crash cycle, what is it exactly? So you have annular solar eclipses, and I'm more interested in the ones around the equinox for obvious reasons we've been over with on this channel. But in 2008, so you have a solar eclipse followed by a lunar eclipse within a 6-week period, okay? And it can be a full moon or a full moon lunar eclipse, but you want that within 6 weeks. And from Steve Petz's work, he said statistically, it's more powerful. It happens within 2 weeks. Well, guess what we just had, guys? Let me show you on this chart. Guess what we just had October 14th. I can't show you here because this is the 13th, but October 14th, we had a solar eclipse. Do you know what happens this weekend? October 28th. Yes, we have a partial lunar eclipse. So I want to show you a really interesting pattern after I explain this to you. So you have what Steve called this crash window. You have your solar eclipse, your lunar eclipse, and he said 6 days before the lunar eclipse or full moon, 6 days before the lunar eclipse, or three days after, you should have a secondary high. Let's see if that played out this way as well here on 2008. Solar eclipse, lunar eclipse, here's your secondary high. You see this? And then the market cratered 50%. And I threw the full moon on here just for some added benefit because 2 days later, the market fell apart. So that's how that played out. And let me show you this actually in 1987, how it played out. Throw this on my screen. There you go. You see on my screen here, you have the solar eclipse, the lunar eclipse, and then the Dow fell 22% in a day. That's 1987, okay? And he tracked this for 8 separate crashes. So it's an interesting crash window. Again, it provides confluence for what I think the market's doing, which is going in a downtrend. I think it is inevitable at some point in this cycle, we're going to have a Minsky moment. The greater the stability breeds the greater amount of instability where you will actually have a crash in the market. May not be 20%, but just big market movements, chunks of percents, 2, 3, 4, 5%. And you may see that. I think where it's more likely to see something like that is going to be underneath 4K. When we break 4K, you break Tom Lee's back, you break the permabull's backs, they're going to see what's going to happen is going to take out your low because the market has never set a low prior to a recession, not once in history. And everybody's coming back around on the recession train because of the yields. Guys, let's talk about the overall market really quickly. Everybody's been making a big deal about the job numbers. Why are the job numbers that important? So last job print, I think it was over 300,000. If you dig under the hood of the job numbers, this was actually a lot of part-time jobs. And actually the last 3 job prints, we lost 653,000 full-time jobs. That's only happened 3 times in the last 25 years. Do you know what 3 times that happened where we lost 653,000 full-time jobs and job prints? Well, it happened in the pandemic. It happened in the GFC. It happened in .com. Do you know where the yields are right now on the 10-year? They are at the GFC levels. Do you know where the leading economic indicators are? We just printed last week our 16th negative month. The only streak that's longer than that right now is the GFC, the second worst recession in the U.S. history after the Great Depression. Are you guys starting to put the pieces of the puzzle together? Because most of YouTube doesn't understand what's going to happen. So what's going to happen is everything will pull down as the market, which is going to be late, realizes what's happening in the marketplace, in the economy. And I've showed you this chart so many times, but let me show you one more time, because if you watch CNBC or Bloomberg for a couple hours, you go crazy. You go crazy because you can't understand why they keep talking about unemployment being so low. Unemployment is so low because it doesn't spike until after the recession hits. Look at the chart. The chart shows you where unemployment spikes. That is all you need to see. The big red lines up. Unemployment spikes during the recession and after the recession. The lags in the economy. Look, the S&P right now has 12% earnings roughly priced for next year and 12% for 2025. You're looking at 24, 25% earnings increase as the economy is slowing by design. This is not me saying that this is going to happen because I have some type of premonition. definition, this is the Fed telling you they're trying to slow the economy. They're going to slow the economy. The marketplace is overvalued and it's going to affect the prices of everything. You cannot have Tesla trading at 60 times earnings, Adobe at 50 times, Ferrari at 50 times. All of these stocks are going to come down and trade at recessionary norms at some point in the future, which is a 12 to 14 PE. And if it's a bubble collapse in the GFC, you know what the S&P went to on a PE? It went to 8. Okay, it went to 8. So understanding the fractal movements in the market and the esoteric patterns can help you determine what's going to happen. And guys, what I want to show you here on this pattern, let's look at this. So you have your 50% drop. Let's back this up. I want to show you something interesting that's happening right now. I highlighted it in bright pink for you here, okay? Look at this bright pink. Remember, the market moves in patterns. Pay close attention to these dates. Thursday, October 11th, you made a high. You see this? Thursday, October 11th. You came back up for a second high in the S&P. Wednesday, October 31st. And by the way, you came up for these two highs and you had a big drawdown. I think this was like 5%. Look at this. 5.87% drawdown. You bottomed Monday, October 22nd. Do you know what today is? Today's the Monday of that bottom. Today is Monday. Is it October 22nd? Today's Monday, October 23rd. This peak right here, October 11th, and then this coming up top that's coming here in the marketplace. Where is this? Let me get rid of this. This is Wednesday, October 31st, Halloween. Look at this. I want to show you the confluence for this right here. Remember, we were talking about this. I was showing you the ratios and the Nasdaq between the tops. And I told you, look for your second top to come up. This is before the sell-off. Look for your second top to come up October 31st, November 1st, November 2nd. Now, remember, in the Petz crash cycle, you can have up to 3 days. Who cares? 3-4 days after the actual eclipse that you come up for a lower high. It's your trading opportunity before the crash, if you are going to get a crash and not a Santa Claus rally. We had a 4-spot 20% drawdown. Back in 08, you had at the exact same time, look at this, October 12th is your peak. October 12th is your peak. And then look at this for the top. Let me go ahead and draw this. You're going to come back up for your top. And this top can be anywhere from Halloween, but guess what's coming the day after Halloween? Powell on November 1st. You don't think the market's going to rally or dump based on what Powell says? So I think November 1st or November 2nd is going to be your peak. And again, that eclipse is a Saturday to Sunday. So that's actually a 3 to 4 day window right there. And you should be coming back up. And when you look at this on a 3-day chart, because you're like, Brendan, but we just had the double top. You gave us the trade here at the double top to short it. Back up. Go back out. You can see double tops very clearly. Look at the 3-day chart. Look at the 3-day chart. All you had here, the smaller double tops, is a massive double top. And you're going to come back up for the second massive double top here on the 3-day. And if you want to have that Santa Claus rally, we're going to look at it on the daily. Got to take out your fractal high. Got to break above the 50. Guys, we may be doing a rinse and repeat trade of the exact same trade that I gave you, where the S&P comes up. Okay, the S&P comes back up, and let's say we get back up to 43.20 at the 618, 43.56 at the 786. Make your lower high, start making a top, something like this. We have big tech earnings on deck this week. So you have the Catalyst Tuesday, you have Google, you have Microsoft, we have Amazon this week, we have Wednesday is Meta. You could see this come back up, start to peter out again, and boom, there is your trade again. And where will this be, reversed and you go up in a counter trend rally back to the upside with a target of 45.31? That would be your end of the year Santa Claus rally. If the market decides, we don't care about the incoming recession, all the money managers that have been losing money, which 84% of them do, they all want to chase these big tech stocks and drive it back up. But you're going to know that because you have clear pivot points and you have the 50 moving average, guys. But this is the exact pattern. So this is the incredible nature of the market, that back in 2008, the 7-year cycle, you broke here, you made a top October 11th, you made your second top before the market sell-off, you made your second top October 31st, and when you look back at the marketplace, you're doing the exact same thing again. The exact same identical double top pattern you did in the last bubble cycle. That's how I think this is going to play out. You're only going to get this on this channel. Definitely like and subscribe, guys. Help us out on the channel. I really would appreciate it. So this is what I'm looking at for your next move up. Assuming we can hold this low, that next move up is going to be absolutely critical here in the marketplace. If we don't hold this low, guys, I've showed you this many times, but if we don't hold this low, let's go ahead and get rid of this fib. Where are we going to go? I think we're going to go, let me go ahead and pull my fibs here. We almost got to 41.76 already. I think you're coming down to 41.76. If you lose 41.76, game on. I'll see you guys at 40.82 because that's where price is going at that juncture, okay? But I think the market wants to try to hold this low. You look at your indicators. I believe you're oversold. Let's look here on another chart with TA. I think you're well, no, on the MFI, actually, you're at the median line. So the smaller time frames, you're oversold, but on the daily, you're at the median line. You can still do this wave up. You're below the 200. You see your 200? And then look at the orange 50, okay? You're going to get a death cross. Here's a death cross indicator I've been using, a death cross predictor. I talked about this before, and it gives you prediction, but remember when you dump or pump, it's going to affect the prediction, but it's saying November 18th, you're going to get the death cross November 18th. On the other indices, some of them are already in a death cross, like the Russell, and then you have the Dow Jones we're going to go over as well. But this is what you guys need to be paying attention to in the market because the S&P is going to drive the whole market. The S&P is going to determine what Bitcoin does. It's going to determine what everything it does. I told you the S&P ranges for me. If you break hard below 4,200, I think Bitcoin's getting pulled down. If you can break up, take out these pivots, right? Take out 4,400. You can see it here on the screen. Let me zoom in more so you guys can see this a little bit better. If you can come up in price, you get your rally, right? You start basing, you come up, you have to take out these pivots. You have to flip the 50, come up, maybe a double bottom, and that's when you're going to look at those higher level targets. The likely scenario, and it'll be within that Petz crash window as well, between now and November 2nd with Powell. If Powell comes out and remains hawkish, which he kind of gave you a preview of when he spoke the other day, if he remains hawkish and doesn't say too much about bonds are doing our work for us, if he remains hawkish but says we're not raising rates, but we have more rate hikes that may be needed, the data came in hot, and he gives that type of tone, I think you're coming up for your lower high, guys. I think you're coming up for a lower high. It'll be a rinse and repeat trade, and you'll be able to short this on our way back down to 4,000, okay? And if we break this structure up here, that's when you're going up. That's your pivot out above the 50. Doesn't look likely at this juncture, but anything is possible. Can't rule anything out. I hope you guys have enjoyed that trade that I shared with you. Let's go ahead and start back in the beginning. Let's look at the VIX. VIX is dropping some. Let's check out the DXY. That's because the DXY is also dropping 105.752. Let's look. This is bullish for the markets, guys. This is that rebound we're talking about, repeating the exact same pattern as 2008. Absolutely mental. Let's look at the 10-year. 10 years coming down, got some profit taking. We did get above 5%. That was my 1618 target, as you can see. So 10 years is going to stay around here, put pressure on our markets just like it did in the GFC. Let's check out the Dow. The Dow bounced right off the 1618, 33,010, got below. The Dow's also going to come. You can already see it. The Dow is very clear. I'll make a video showing you guys how to trade these topping patterns, but the Dow is very clear what it's doing. I mean, look how clear cut these double tops are, just like the Nasdaq, right? These are 5-wave moves in the double tops the Dow's been making. And you can see if you get this nice demand wick, you're going to come back up. Let's get an upside target because I saw in the YouTube comments, couple people exclusively trade the Dow. So that's good. So let's look at this. 618, 33,669, 786, 33,884. I like the 786. Why? Because you'll be hitting the 200 again, right? And that's been my theory for multiple weeks. If you see the Dow, a mirror image of the S&P below the 200, what do you think the S&P is going to do? And what did the S&P do? Fell below the 200, right? Predicted that for weeks now. I told you before in that other video that where you could have this rally, but it's going to be from a lower number, a lower pivot, and that's exactly what happened in the S&P. Let's look at our death cross prediction. November 3rd, 2023. So again, coming up. Right? Look how close you are to getting a death cross here. This doesn't mean the market falls right away. Oftentimes you'll see a rally into the death cross. Likely scenario, we're coming up for our lower highs, double tops. Zoom this out in the 3 days, they're bigger double tops. Let's look at the broader market real quick, and then we're going to Bitcoin, guys. The broader market is the Russell. Again, another fantastic trade I gave you guys on here. We're shorting the Russell back at 2000. Look at the drop the Russell made, went all the way down to the 1689 off that trade. We trade the Russell as well in the room. The Russell helped me retire last year. The Russell is in its market lows. Why am I showing this? Because it's in its market lows. It fell below 1670 to the 1618. It wants to come up again. This is a lot of chop in here. It's at the market lows. The Russell's 2,000 companies. It's a broader measure of mid cap, small cap, normal America, right? And a third of the companies are roughly a zombie company. They can't handle their own debt load. Okay. That's why the Russell is so weak. So are you going to have a rally to the all-time highs when you have the broader measure of the market at its market lows, when you had 7 stocks that carried you this far, where if you took out those 7 stocks, the other 493 companies in the S&P were either flat or they were up 4%. Is that going to carry you to a new all-time high? It's possible, but you guys know the pivots now, and I think the lower high is much more likely. Let's look at Bitcoin. Oh, the Russell, by the way, already had its death cross. I meant to show you that. Russell had its death cross right here, October 11th, October 12th. Russell in a death cross, Bitcoin in a death cross, Dow in a death cross in a few days, S&P a few days after that. You see what's happening in the market, guys. Can't explain it enough, but let's move forward. Look at Bitcoin. I've showed you my Bitcoin Wyckoff. Thought I'd show you something different here and show you this in the diamond pattern because you're trading in a really nice diamond pattern. I tweeted this out as well. Give me a follow on X, guys. That's in the video description. And you can see how we've been using resistance, using support. We're going to do a little bit of a deep dive on Bitcoin for you guys here, but you can see we're pumping out of the diamond. So where would you actually trade this? This is what somebody asked me on X as well. Well, traditional way to trade a diamond pattern, you got to take out that fractal high, 31,862. You would trade the breakout. Now, in a traditional diamond pattern, what's your stop loss? Your stop loss is your fractal low in a traditional diamond pattern. That's 24,750. I don't think anybody's going to do a 8,000 point stop loss. But again, this is a daily pattern, right? This is a daily pattern, but nobody's going to do a stop loss like this. But this is the traditional way you would trade this pattern. Now, before we deep dive into this is on a 3-day chart. I want to show you guys how I got these targets. You can see my 1618, 31,158. You can see we got a hit here. You can see we never closed above it, and now we're coming back up to it again. How did I get that measurement? Well, that was pretty simple, guys. When I look at patterns, the reason I zoomed out in the 3-day chart, let's get rid of the what's that called? Moving averages. When I look at patterns, I'm always looking at wave movements. I'll look at wave movements, esoteric wave theory. I'll look at this in a smaller set. I'll look at this in a broader set, a more macro set. In this case of Bitcoin, I'm specifically looking at this range. And depending on how you look at waves, let me show you how I look at waves. This is how I got these targets. This provided us, we shorted Bitcoin here. We shorted Bitcoin between myself and Mark as well several times in this range. And now we have this pump up as well. And I shorted Bitcoin here. I told you guys about that short as well. So now we have the pump up. Look at my 1618. Now, why did I get this? Because simply put, guys, from a wave pattern, I'm just looking at this like this. Let me show you here. Where is the patterns? Let's look at a wave. This is not Elliott wave. This is my esoteric wave theory, okay? So you have your wave 1. You have your wave 2. Now, Elliott wave wouldn't allow this to be a 2 because 2's below your 1, right? Doesn't matter. I don't apply static rules. When I say Elliott wave, I'm talking about Prechter and Frost version of Elliott wave. You know, Ralph Nelson Elliott's actual wave principle book is like 50 pages. Okay. They turn this into multi-100-page volumes of rules for trading, and they never work, in my opinion. And too many people have too many different wave counts. If you understand dynamic markets, you can apply waves when you look at them. Okay. So this is one count you can do here. So this is your wave 3. Now, wave 3 is up here. This is your wave 4 that you're chopping around in. Okay. This is your wave 4. Your wave 5 would be up. Let me redo that because I cannot talk and draw waves at the same time. So wave 1, wave 2, wave 3. You can do 3 here, 3 here. Doesn't matter. I'm just showing you guys this really quickly. Wave 4, and our wave 5. Where would that 5 go? And I'm going to show you this if the market rallies and or if Bitcoin has decoupled from the market, what is the largest upside target I have? And some of you guys are going to freak out. You're going to be like, man, there's no way it's going to do that. 40K, 40K up to 40, basically 41,000. Let's just draw it over here somewhere. Okay. This is if you get a Santa Claus rally, that would be the move I'm looking for Bitcoin to do. Now, a couple of reasons I got this. Obviously, this is harmonic expansion in esoteric wave theory, 1618 to 2618, harmonic expansion. You can see how accurately your fibs played out. The 1 fib, the 1618, providing multiple trades. You can see what you have here is you have, this could be accumulation if you break out of this diamond, or this is distribution. And if it's distribution, got to do a tighter wave count. You have to do a tighter wave count. And then this was your wave 5, right? But this is just how I get targets, guys. And this is how I formulate my trading plan when I'm looking at assets. And you want to see Bitcoin knock out 31K, that 31,856, which it looks like it may try to do while I'm recording this video. Okay. That would be my big upside targets. Now, do we have closer targets if we don't get there? If we get a fake out that Bitcoin loves to do, right? Do we have closer targets? Yeah. Let's go from the fractal high to the fractal low here in the diamond. And you can see this. You have 30,372 was a 786, provided some resistance to diamond edge. You broke out above it. Your 1 fib is your fractal high. You have to clear out. 1272 is 33.7. 1618 is 36,164. At a minimum, guys, if this continues and the dollar falls, and as the markets rebound here this week with big tech reporting, as long as nobody shits the bed and the market wants to be bullish, you can see this come up to 33.7. You can see it come up to 36. And then you could see it come up to my higher targets of 40K. And at that juncture, guys, that's going to provide some awesome trades, because where will this reverse? When the market reverses as well. Bitcoin spent a lot of time accumulating here. This could have some velocity to it. Looking at the 3-day chart, you are not near overbought. You got overbought coming up here. This can still come up on a 3-day chart. Let's see this on the daily, okay? On the daily, you're not overbought as well. You can easily come up, take out this fractal, and push towards 33. If the market wants to continue its move up, again, that target goes all the way up to 40K. And be aware if the markets reverse, if you get bad big tech earnings. If on November 1st, keep in mind, the market has priced in a 99% chance Powell will not raise rates November 1st. 99% chance. So most likely not raising rates. That pause, depending what he says with the hawkish verbiage, if he does hawkish verbiage, that pause could generate you a little bit more rally too. So this is all coming into big tech earnings with Powell potentially pausing. Be aware these upside targets can get hit. Now, we talked about this is a huge stop loss. Where would you trade this? Before I forget and go off on a rant. Honestly, what I would do, I use ATR for all my trades, right? I use ATR, but let's see what that is here on Bitcoin. And that's going to be a big range on the daily as well. That's 786 points is one ATR. What I would probably do if I saw confluence and I want it to be long, you guys know in bear markets, I like to be short. Majority of my trades are short. But if I saw confluence and I really thought this was going to break out bigly, I would look at this. I would break that fractal high, 31,862. What are these lows here in the range? Let's look at a low. That low is 29.4. This low is 29.7. And this fractal low here is 29.9. So basically 30. And then I look at 786 points on the daily. I mean, I think that's a reasonable on a larger time frame. You could obviously zoom into an hourly, a 15-minute chart and come up with a tighter stop loss. But if you're going to swing trade this per se, right, daily time frame, I mean, ideally, I would want to be below these fractal lows in case it comes up, comes back down, retests somewhere in here before it takes back off. So I would probably want to be around 30K if we break this coming up out of 31,862, which is roughly, 2 ATR. I typically trade 2 ATR. So 1 ATR is almost 800 points. So 31K, go down another 800 points, 30,200. That would be my stop loss if we break this fractal and have upward movement. All right. ATR is a measure of volatility. Again, this is one of our custom indicators, which you do get for free in our room. ATR is a measure of volatility, and you can put it time frame sensitive. That's how much Bitcoin's been moving, is roughly 800 points here on the daily. It's 1 ATR. So let's continue. Gold. All right. we got we got to show some charts for gold. I added these to have fun. But so gold, guys, we shorted gold up here at 2055. Got a 250 bar drop, right? Massive move. And I want to show you guys this as well. Looking at this is just a simple fib pull down from that 2050 or 2067 high down to your low, whatever that is. That low is 18, what is it? 1810. 1810. Okay. That's your low, 1810. And now we have this parabolic rise up. You have a death cross in gold as well. You have a parabolic rise up, which if you watch Peter Schiff, which I do enjoy his podcast, but if you watch Peter Schiff, he's elated about this. A lot of gold bulls are elated about this. But let me show you some charts. Let's see here. Let's look at the first chart. Let's see which one we got. Let's look at this chart. I'm going to read it to you. It's a little story time. So trading a parabolic arc. All right. This is from my pattern book, Trading a Parabolic Arc. And I want you to notice when this example is from. The example above illustrates a parabolic arc formation from the silver futures chart. In 2005, silver gained momentum as the metal sparked an interest in the worldwide markets. Silver futures rallied from a mid-7 to 15 range in a 12-month period. Prices rallied vertically during the beginning of the 2006 setup for a correction. But most importantly, from April 2006 to July 2006, silver futures corrected 62%. We talked about this all the time in the channel. Silver fell 62%, expressed as fee. It made this exact pattern that gold made. Look at the chart. Made the exact pattern. And when you look at the 7-year bubble cycle, it's doing the exact same thing again. Massive acceleration to the upside. And also the other metals did this back in the great financial crisis. Massive acceleration to the upside. Let me show you one more chart. Let's look at this one. This is, where is it? I have this for copper futures. Copper did the exact same parabolic arc in the GFC. You see that? So again, this is something that you're going to see over and over again in these assets because they're repeating cycle moves. So how would you actually trade this? Well, that's a good question. Let's look at this. So this is the arc that we're talking about. Massive move, right? This is going to come back down. Now, what I would like to see, remember, gold was tracking very closely to the markets. We overlaid the S&P many times. I'm not going to do that again. This video is going to be forever long. But gold broke from the markets, and now you can see this big rise up. If the markets do rise up for this little rally between now and November 2nd, I want to see if silver can come up. I'm looking at this on the daily, okay? I want to see a topping formation. We've been over this many times. I'm sorry, this is gold, not silver. I want to see if gold can come up. I want to see a topping formation like a double top. I want to see a double top type structure. Look at this nice clean double top. We short it almost perfectly up here at the top. I want to see if this can come up maybe to 2012, get a little bit more euphoria, or if we just start chopping around. When I look at the MFI, not quite overbought on the daily at the 90 level, not quite there yet. So I want to see a little bit more surge with this rally, really gas this thing out, right? And if I look at this on the 3-day chart, where's the MFI at? It's just a slight rollover, not like this 3-day overbought you had on the rocket peak, right? So it's just a slight rollover, but it is rolling over. So if we get a little bit more surge or we can get more candles, let's look at this gold here on the 4-hour. Look at that. Does that structure look familiar? It's a Ponzi pattern. It's a double top 3-wave structure. Look at that supply wick. You got up there as you're buying climax, boom, supply. Now you're back in this range. Doesn't mean this is going to break, but if it does break, that's at 1964. Watch that fractal low, okay? If you did start falling back, I want to see if this holds and we get a nice double bottom pattern. That would be nice to see. And that could look something like this. Where's my ABCD? That could look something like this. Get a pattern like this. 5.62 retracement. Maybe this is your low. Maybe it comes back down a little bit more. Let me spread it out so you guys can see it. Maybe it comes back down to this fib at 1969, and you want to see this come back up, right? And then we can look at targets to the upside. My first target I would be looking at is the 2012, a major fib, the 786 fib. And if this does do here, this is a small time frame for me. I'm a daily time frame trader. But if this does do some type of double bottom structure, I don't know if that's going to be the bottom. Let's see if this could do something like this. Your 1618 will get you back up to 1990. It's a very tight range here on the daily. So Looking at this on a 4 hour from the daily candle, it's a tight range still. So you want to see this. I want to see this progress, mature is what I'm trying to say, and give us some market structure to trade. You need to hold 1969, next key resistance 2012, and everything on gold. Look at this. In a 4 hour, got way overbought. Now it's coming back down. If it can bounce off the median line, I want to see if we can get a wave back up. I want to see this really gas out in the larger time frames. Let's go ahead and look at the Nasdaq. Nasdaq, nice bounce. Look at that bounce off the Nasdaq. Look how clean the double tops are here. Bounce just below the 14,461 harmonic expansion off of our double top target. Okay, these are legs. You view these as drives in the marketplace. I'll show you how I got that there. Just pull your fib on the fractal low. In this case, on the daily, it was the same candle. Your fractal, your high, and this is in the same candle because it's the daily. You can go down the 8 hour and really separate that, but it doesn't matter. It comes out the same. 14,461, Nasdaq, nice bounce. Again, big tech reporting this week. And when you look at this on the daily, people might be confused what they're looking at here. You took out the lows here, coming up for the double top, guys. That's the structure I want to see. And again, this is where that count came from originally because of how clean these double tops are here on the daily time frame. The difference between the tops, 8 bars, 12 days, 8 bars, 12 days, 10 bars, 14 days between the two highs. And then we have this 7 bars takes you out to the 23rd, which was your bottom. And let's go out to 10 bars. That is the 26th. Let's go out a little bit further to the 31st, October, and Powell on November 1st, 14 bars. This originally, before we broke down, was where we were counting these bars. Let's look at this on a 3-day chart and see what this looks like. See how much more compressed this looks like with the structure change of the double tops, okay? Look at the double top now. Now you can see it's a little bit differently. Let me expand this. We're going to look at this for a retracement level. You see this? You have your first double top on your 3-day chart, right? Your first double top. You would take this from your fractal high down to your fractal low. You almost came up to the 786. Market broke back down in our channel, retested the base of the channel. These are drives, okay? This is a double drive. You have your drive down, rally up, drive down, rally up. And let's see if we get their drive here for the triple drive. And right now we're going to get our rally back up. And so what I want to do on a 3-day chart, this larger time frame, fractal high, current low, 786, 15,149, 618, 14,993. You guys have heard me say this many times. My preference is to trade these markets at the 786, the square root of 618. This provides you cleaner double tops because I use as an exit point the fractal high. I'll be a little bit above the fractal high. So if price did something like this, come up, and we don't have the 50 above us like we do on the S&P. So be aware of that if you're trading this, okay? We don't have the 50 above the potential double top, but if price did come up, I want to have a little bit of room. So I'll put my stop loss above the fractal high in case it gets above the 786 and comes down. So just be aware of that. Let's look at these moving averages here on the daily and see where they are at. The 200, what do we got showing here? We have the 200. Do we have the 50? Do we have the 50? Let me go ahead and add the 50 really quick. Make this SMA. Put the 0. There we go. So our 50 is above us in price, but it's not above the double top. The 50 is at 15,044. So again, that's your first key level, and it's just above the 618, right? You're looking for confluence where you can come up to. Watch this. Watch for a retest of the 50. That'll get you above the 618, but I'd love to see a wick hit the 786. If you struggle around the 50, then look for this to turn back down, doing exactly what it's done over and over. And again, this would be topping roughly the same time. If we repeat that GFC topping pattern where we look for that top October 31st, but with Powell on the 1st, I'm looking at November 1st, November 2nd with Powell. Is he going to drive it up a little bit higher, or is he going to be hawkish November 1st and you see it roll over? So that's your timing for the tops, guys. October 31st, Halloween to November 2nd. Keep that in mind when you're looking at this. On the daily, we did cross the median line into bearishness. Momentum is bad. This is far away from a double cross, but let's look at this. Death cross prediction. And that's from Vladimir.Kamba. If you guys want to try that out. And again, I don't know the guy. I don't know how good the programming is. I just want to share this with you because I think it's interesting. December 23rd. So basically most of these work on a rhythm of where they're looking at the candle movements. If the candle's pumped up a lot, it may get pushed out. The candle's dump more, it may get moved in. But this is saying December 23rd, you'd get a death cross. Here's your 200, as you can see in white. Here's your 50, and that's the angle in this descending channel. Man, this has been, you guys have been watching this channel. This is, I mean, if you're just trading on your own, I know many of you do. I mean, it's just corresponding to the channel, your longs and your shorts, right? TA does not have to be difficult when you understand market cycles. FTSE, traded this in the room as well for the guys. And we took a short up here. We caught this nice move down. We broke below the neckline of, once again, a double top, right? Death cross and the FTSE as well. So I know you guys in the UK are watching this. 73.91 is your neckline. If the US markets move up, you should see this move up. You want to look for it to do a classic lower high. Where's a good target? Right there where your 50 is, right at the 618, 75.13. See if you struggle there before coming back down. And if you put this in Wyckoff, it would look something like this. Okay, you have your buying climax, you have your automatic reaction, your retest, and this is your double top. This is a law of three pattern, and you broke down with a down thrust. You want to look for a lower high coming back on the Wyckoff, and that could be right here from that downside 618 right at the 50. Okay, check that out. 75.13. Pay attention to that. If you see the US markets rally, I would expect the FTSE to rally as well. Let's look at Ferrari real quick. Some of these patterns, if we get a rollover in the market, are going to be really easy to trade, guys. You can trade all these on SimpleFX as well. Looking at Ferrari, if we get a double top here in Ferrari, remember it says like a 50 PE. Ferrari comes up. Watch 310, 313 with the market. If the market starts to move up as well, see if you peter out here and do a classic double top. Where would my stop loss be if I'm trading Ferrari and the market may break out higher with Powell? If it comes up here, it may not get here till Powell, but if it comes up here, I would personally be out. 317 is the peak here. I'd put it a couple bucks above, maybe 320. And if Ferrari comes up and does this and the market does a Santa Claus rally, see, I don't trade individual stocks without looking at the indices, guys. You got to see, is the S&P taking out its 50? If the S&P took out its 50 and flipped it, then yeah, I would assume a lot of the stocks are going to rally because that could be your Santa Claus rally to those higher levels, the 4450, the 4500 level. Okay, so I would assume that. So be aware of that when you're trading individual stocks. It relies heavily on the confluence of what you're seeing in the indices. Now, Tesla was a $1 trillion company. Tesla broke down that big gap down again. Look how cleanly that held the channel, broke the double top. The smaller double top structure in confluence with our larger double top structure, which has the neckline down here. We broke below it, trying to pivot back up. You have a gap here, as you can see. You could see Tesla try to come back up and close this at 241. If we get a Nasdaq rally this week, going into Powell, going into Halloween, November 1st, November 2nd. And then what would you be looking for, guys? That lower high retesting the channel, right? This is what you would be looking for. Tesla comes up, could fill that gap, hit your head. You have the 249 is a key level here. Hit your head and you start rolling over. Maybe you just fall quickly. Maybe you're lucky and you get another double top where you can short that second top. But this is all you're looking at in a Wyckoff perspective. You would have your top here, looking at this like your buying climax. If you're up thrust, you have your reactionary candle here, you have your down thrust, you'd be re-entering your Wyckoff to retest, make a lower high. Then you would have basically a law of three, lower high, and then the impending roll down at some point, making a double top or just gapping down at some point. So that's what you need to watch on Tesla. That key support you need to try to hold or get above actually is 217. That was essentially your neckline of fib, even though you have a fractal low of 212, okay? So you want to get back above 217, try to move back up to that 241, 242 range. What's Adobe doing? Adobe, I've been interested in trading for a while because it's super strong. Again, we went over this before, but Adobe supposedly, according to some analysts, is the best trade for AI. Well, when I saw that, the first thing I did was look at the PE. Adobe with like roughly a 50 PE. This thing's going to sell when the markets roll. So we had a little double top form here on the daily as the markets start to fall. And now we have Adobe coming back up once again. And you can see you have a double top structure here as well. On a daily time frame, I want to see where we get to in that rally. I told you previously, 786 at 608. If Adobe, because this was showing prior to the market selling, this wanted to go higher. Okay. Adobe wanted to go higher. I think their earnings they're late. I think they're, oh, wait, I can tell you right here, December. Yeah, it's December 13th or something. So that's for Adobe. Let me open that up. I never look at these. December 13th. So that's Adobe. So they're going to be affected heavily prior to December 13th and what the broader market does. If we just get a soft pump up in the markets and they make those lower highs quickly, then I would be watching Adobe at 560 was the level that I liked it. That was my wave projection here. And then a 786 at 565. But I would love to see Adobe break out with a market tech rally up to 608. That would be awesome. That's where I want it to top out, get this nice movement that would give you this pivot here as well to trade to the upside. Looking at that, your 1618 on this upside Fibonacci expansion, harmonic expansion would be 601. So 601, 608, that's my golden pocket right now for Adobe to come up there. Give me some type of topping structure like this. Want to trade this thing because I think Adobe is going to get cut in half when the market really pulls down. Looking at NVIDIA trying to hold its base. Again, NVIDIA below the 50, okay? It's below the 50 on the daily time frame. Pulling down your fibs, you got to get up to 434 just to get to the 382. You're going to see this move up most likely as well with tech. I don't remember when their earnings are. I don't have the sheet in front of me, but you're going to see, especially if they have good earnings, you're going to see it move up. So the key levels are 450 at the 618, which is your 50 moving average. 461, you want to break here in your W pattern. We talked about this before. You want to break that fractal pivot of 476. This can give you upside to 517 if you start to get really euphoric in a rally. Not seeing anything yet, but again, big tech really kicks off tomorrow with Microsoft and with Google. Okay, so that's Tuesday. That could be more of the formation of a stronger rally to the upside if you are going to get one. Something you need to watch, and this would also be if it topped out here, nothing but an up thrust basically in Wyckoff, maybe make a double top and come back down. So watch that one as well. We already covered Ferrari. Guys, I think that is it for this video. I hope you enjoyed the content. Like and subscribe. And everybody have a great, rest of the week till Thursday. Peace, everybody.